Ernest, how are you doing? You got your mic today? Or you still got? Hey Jerry, how's it going? Now, did everybody watch the live stream? I know that Ernest, Oscar, and Rakesh did. Did you, Jerry? A lot of it? Okay, cool. Well, I won't repeat anything from that then, unless anybody wants me to.
What was the Apple trade you took, Jace?
Okay, so I didn't take this trade. This was a bonus trade just for speculative purposes only, and not part of our advisory, but I just want to throw that bonus trade out there for you guys if you do want to. If you want to have a little bit more of a speculative position with the Fed, and then we got the quad witch happening Friday, which I think is kind of pinning the SPY around this $300 price. So we may see our breakout next week. Hey Karen, how's it going?
Hey, I'm here. Finally.
Nice.
How you guys doing?
Doing great. Let's see. Frederick, hello. How's it going? Yeah, so here's the bonus trade I gave at the end of the video. I might throw out a few bonus trades once in a while when I think it's a good time. And much more advanced. So if you think this looks confusing, just ignore it. You know, we don't need to be doing speculative trades. But this is the way I would do a speculative trade if I were trying to be a little more aggressive than we are with our program. And the idea is that we like Apple. We're in a period of peace with China. We're not expecting an escalation during their 70th year anniversary. Apple, except for Aramco, Apple has the highest net income of any company around the world. We've got the U.S. protecting. It's the only big company that Trump seems to like, stateside. So we like Apple a lot. So from that point of view, it seems like a relatively good stock to speculate. Warren Buffett's biggest position. We all know the reasons why we like Apple. On the flip side, the reason we don't like Apple is if the trade war does escalate, it will be devastating to its business. I just don't think that's going to happen this month or early next month. And I think there's the upside. It's been 2 years of them telling us they do a trade deal and not. It's hard to believe that we will get one, but we have the Chinese flying in tomorrow. They land, I believe, to talk about what they would be, trying to outline what kind of trade deal they're willing to discuss that wouldn't make them look bad. So I think at the end of the day, we could possibly see them buying some farming goods in October. And at the same time that we have all the central banks lowering rates, letting the bond market get out of their profitable speculation. So it's all lining up to be very, very bullish for equities right now. And so this trade says, okay, I'm willing to put up $22,000 of capital to buy 100 shares of Apple at a price of $220. And only reason we would be assigned is if Apple were worth less than $220. So the downside is whatever it goes below 220, lose that amount in this trade setup. Now, of course, if you don't think we're going into a trade war, you think all the banks are going to be doing QE, that's a good reason to own Apple. So that's why I like this trade. Is I don't mind owning Apple in the first place. Now I don't want to hold it for too long in this environment until we really do get a trade deal. So that's why I like this as a speculative trade right now. And essentially, we sell a put to collect. That's what I need to get. That's what was messing this up. I was scratching my head on the live stream, and then I had to get off. So we sell a put to collect 288 a share. And then we use that to buy, and now let me put this back up at 10. I'll go to 9. Yeah, we'll go to 10. So the short put we'll get to keep if we're right, because the value of Apple will go up, and the guy who bought the put option, it's going to just lose all its value. That's going to finance a very aggressive bet on Apple, that it would appreciate considerably between now and next Friday. Now, it doesn't have to go all the way to 232.50 to generate a profit. You can see if it just got to 225 with some time premium left, we potentially pull $500 profits. So, so it's just it's a smart way to take advantage of the option market if you wanted to speculate on this big event. Now, our program is not about speculation and all that, but I know a lot of our members want some extra action in their portfolio, and this is how I would go about doing it versus, what's your other option? Just to go, let's look at another option. If we were to say, all right, well, I'm just going to buy 222.50 call. Well, now you got to put up $2,000, and if it goes the wrong way, you're out $2,000, completely out. So in one strategy, we're taking advantage of the option market, and in the other, we're just kind of being a gambler. So that was just a bonus trade. Do you guys want me to put that back up, or are you guys good with that one now?
Yeah, put it back up.
Okay. So again, we sell the put. And I would say, make sure you really understand what you're doing if you do follow any of these. But if I think there's a really dead obvious opportunity up ahead of us, I may throw out these bonus alerts from time to time. I'm not going to put in the track record because this really is a little bit harder for most people. But I know a lot of you guys are really good option traders, so I don't mind putting it out there for you guys. So the idea is we sell a put. Then we buy a valuable call option. And the farther out you go, the more money you could make. Let's say we wanted to be a little more conservative. Let's try this one. And I'll put up the original one too. All right, well, now that's not a bad looking. So this one would cost us $382 to put on. Let me make that cost less. Let's try to make this about free. Okay, so we put 48 bucks up right now, and we put $22,000 on the line. Now, it's not like you're going to lose $22,000. We don't think Apple's going to zero. In fact, it's got like a PE ratio of something like 13. It's just an insanely profitable business. So this setup is really beautiful. We put up 57 bucks. And we only need the Apple shares to hit 227.50 by next week. And you can pull off a profit of 1,197 bucks. Well, let me put up another one that would be a little more aggressive. Who's going to take the bonus trade just out of curiosity? Or who's considering it?
Yeah, I definitely am, but I don't know if my microphone is working.
Is that Ernest? Oh, cool. Yeah, we can hear you. So yeah, just make sure you realize the ratios here. So Oh, I got the wrong expiration date. There you go. Cost you $7. So yeah, that's a pretty nice setup right there. Well, let's look at the chart of Apple, see if we. And this thing pops $10 all the time when it gets the right. Here, let's make it a little less risky. Let's pull this. There you go. That's a pretty nice. We only need it to go up $5, and you pull a 800% return on the debit that we put down. What, you like that one, Ernest? You want me to leave it at that?
Yeah, that'd be fine. I think that'd be worth doing.
Here, I'll fill it up right here so you can see it closer up. So this is much less aggressive. Now, the further you put these out, the more money you can make, but the harder it is to hit your max profit. There you go. So you put up $100 plus 22,000 collateral. And if we get a $5 move on Apple, we pull in $8.97 profit. Now, on the other side, you might end up owning 100 shares of Apple.
220.
Now, next webinar, Ernest, I'll be happy to, I'll take a screenshot of that and save it. We could talk about how to get out of it. I assume you know how to get out of it already, but just with all the setups right now, I like that trade. Let me just pull up my Twitter feed just so we don't get surprised by anything related.
So what you're doing is you're selling that put to help finance that spread? Is that what you're doing?
Yeah, exactly.
You're selling that naked put? Okay, yeah.
Yeah, so normally we don't do that in our program, and I won't
Yeah,
be
it's
putting,
okay. It's
but yeah,
okay.
just for educational purposes.
Sure.
Because people always want to ask me, well, why don't we do it this way or that way? Well, most of the time, you don't get big, huge moves like this, so it wouldn't be such a good idea. But also, writing put options, if you don't know what you're doing, you might
Right.
put a portfolio into some.
Yeah, you gotta have margining. Your opinion of Apple though, with this, what the new phones coming out this week, I'm wondering what the reports are gonna be, if any, about their pre-sales. I'm not sure how well they're doing with those. Have you heard?
Well, I know they love to bash old Tim Cook for
Yeah.
not innovating and this and that. From my point of view, I'm not microanalyzing Apple, but
Okay.
my point of view is, it seems to be the only big company that Trump supports, and they've somewhat handicapped one of their main competitors, Huawei.
Uh-huh.
And we seem to be in a period of peace between China. They have their anniversary coming up on the 1st. So
Uh-huh.
the reason I like this trade is because I like that Apple is, it's got more things going on for it than Microsoft for growth. It has one of its key competitors handicapped, and it's in a period of peace with the China trade war. And of course, if that were to escalate and they actually did try to retaliate on Apple, that could be devastating for Apple, at least for the short term. So for this trade, it's a short-term trade for a quick little hit, and it's not part of our track record. So just a bonus trade, but it is, it's a good way to see how you could take advantage. Now, a few weeks ago, actually, the person I saw doing this I can't remember exactly what date, but it was back right after the tariffs had hit and the SPY was crashing. Let me pull that up. Now, I used to do much more aggressive advisories that did very well. But again, after getting to know my clients better over time and realizing who are your quality clients, I might have some guy who's ready to pay 2,000 a year, has got 10 grand, but he wants to double his money every year. And if he doesn't make money instantly, he's out. That's not a quality client. So what I come to find is that, the folks who do appreciate what I have to offer are much more wealthy and patient, and they're not trying to hit big wins. But I do know you guys like a little excitement here once in a while, so that's why I've put that in there. But yeah, so back in August, when the tariffs came out, I think we became bullish sometime in here. And, our strategy was just to own the SPY, sell the call, buy the put. Boring, but it works, and it's very risk adverse. But there was a lot of chatter on Twitter that someone right around this point right here had sold. I can't remember what it was. It was something like notional value of something like $15 million worth of bull call spreads that were up here around this date. And to finance that, he had sold something like $1 billion worth of puts. So it was just huge trade. Exactly the same as what I just showed you guys. So this is how the pro traders that are managing huge amounts of capital will go speculate without having to own the asset. Unless, obviously the SPY kept crashing, then he'd have to pick up the SPY. Now he's probably a big bank and they don't mind owning the SPY anyways. But of course, if they can let even bigger banks buy up those puts and then go use that to finance a very aggressive bull call spread, I think he was potentially making a 15,000% return with the setup he had done. And he hit it. So just insane. Because obviously the SPY did rally up, and so yeah, that's a strategy. If you like the asset, you're willing to buy it anyways, but you don't necessarily want to hold it for too long, kind of like what we have for Apple right now. Now, if we get farming goods purchased, I'm going to be very skeptical of our gold position and also our bond portfolio. So, of course, on the TLT, we just do that. Let's review what we'll do if we think the TLT. You guys are pretty well versed on this by now, too, since we've been doing it for a few weeks. Actually, yeah, let's talk about what do you guys want to talk about? Do you have any particular questions you want to focus on? Right now, our positioning is bullish on the SPY. TLT is hard to call right now. We need it to go 30 cents lower tomorrow to hit that profit on that trade. It's Kirk Wells, one of our members, I think exited on Monday when it was at 136. So he made a killing on that put. I'm not sure what he did with the underlying after that. I'll have to chat with him. But yeah, now we have the Treasury clearly starting to manipulate the Treasury market again, which they hadn't done for something like 7 years. And now they're starting to manipulate that interest rate. So we'll have to look at the speech coming up in 30 minutes for me to have a pretty good idea of at least what he's saying his intentions are. But that's what I was telling you guys for the last few weeks. At some point, there's so much money that has driven that Treasury yield so low. Let me pull up the chart, the TLT. I was saying I don't think they can all get out. There's just not enough buyers. And then we had the trade war de-escalate from a measly, what did we really get? We got a 2-week delay on 5% of the tariffs. And we got this huge market rally. We got this huge risk off in terms of people being long the bonds. And then that created, at the same time, we got the budget ceiling lifted. So Treasury's out trying to dump a huge amount of new Treasuries into the market. At the same time, everybody's scared that they're not going to be able to sell their bonds. So they're selling it as fast as they can. And then what do we get in the last 40 hours? We get no money in the banking system. There's no dollars out there. So they had to step in and put $150 billion. That's a ton of money in a single month. If you think about the quantitative tightening, they're only pulling out like $40 billion a month. And so for $150 billion to be injected in a 48-hour period, that's a lot of capital that they pushed in there. So my outlook right now is, I think that, well, first of all, I like this oil play. I know it's not paying off yet for us. Anybody in the USO trade?
Sure.
Yep, Ernest is doing it all. All right, buddy.
Yeah, I took it yesterday too, a little bit. So I was curious to hear your thinking
Sure,
on that.
sure. So
I was tentative, I have to tell you, because I was wondering how this thing was going to play out and if we needed to kind of wait a little bit. But so I'm curious about your research.
Sure. So oil and the S&P 500. Oh, wait, I got a quick question from Oscar. Would you exit the covered call on USO if you have substantially realized the value of that call? Well, if I was using the call option to try to generate the profit because I thought the asset was going to travel flat and I was wrong and it was kind of going down a little bit, yeah, you could sell that and buy it back. On that particular trade, I'm trying to catch a movement in USO and not trying to generate the profit from the call. So in that trade setup, we've been actually trying to use the call option just to finance the put, but we still want to be able to capture upside. So if you were to cover that call, that'd be fine, but I would not go write a new one right now. I'd wait till the next trade. So sure, you could probably capture a little extra profit that way and still get the upside value in it. So that's a smart comment on your part.
Good job, Oscar. I was thinking the same thing. Good. Thank you, Oscar, for asking that.
So, but what do we pick up on the call? Not a lot. So you're not gonna greatly enhance the returns. But yeah, that's astute of you and shows you do understand what we're doing. Now, from my point of view, I got to keep this product really easy and passive. So I'm not going to be trying to pick up little extra pennies and create a whole lot of extra work, because that would detract for a lot of our clients interest in the program. So yeah, you might make a little extra on that. But yeah, so oil and the S&P 500 are very correlated until oil gets too expensive. And I was reading some analysis from JP Morgan on what exactly they think the price level on oil might get to before it'd be troublesome. Let me pull up my live stream doc. So, okay, so here's why I like oil. In general, oil goes up with the S&P 500 as growth grows. So does the value of oil. But at the same time, we have two big things happen for us. We have the attack on Aramco, which will probably escalate. It's not going to escalate instantly. It could have, but it didn't. Now, just as we've been talking on the live stream and today, we have Saudi Arabia coming out with proof it was Iran. We've got Trump saying they're going to put a lot of sanctions on Iran. Iran's been trying to pick at Saudi Arabia for the last, for most of this year, probably much longer than that, last 100 years. But I think that the price of oil is going to go up because of all these factors. We've got Fed easing. We've got central banks around the world easing. We should see PMIs pick up. We've got a period of peace with China. And then to just add a little cherry on top, we've got Iran and Iraq, or the Israelis ready to blow each other up. So all that adds to a very nice picture for oil. But then where do you want to mine your oil? The U.S. has none of these problems. So I do like that play. And unless we see something happen between U.S.-China trade relation, I think this is a play that we do for probably September and October. And if they start buying farm goods, this is a play we can do until oil gets too expensive. So we could be playing this trade for quite some time. The risk-reward ratio on it is very aggressive. So we're looking at a potential 4% loss week over week, or a potential 8% gain week over week. So if we hit a few 8%, we could hit, we can lose 2 weeks and then win 1 week and break even. So, we only need like 2 out of 3, or even 3 out of 5 winning weeks with this setup to be highly profitable. So that's what we're looking at on that one. But yeah, at some point, all of a sudden, too expensive oil creates inflation, makes the Fed need to raise rates, and then that's when it can become counterproductive. So yeah, I think oil plus Aramco is the world's biggest company. They have net income that's something like $5 billion bigger than Apple. So it's a huge company. They're partnering with JP Morgan, all these other big banks to do their IPO. So it's in their best interest to have a healthy oil price. So in general, I really like that play right now. And the big thing, again, it seems silly, but really what we're looking for is, can we get some sort of trade deal relative to buying farming goods? They need the food. I don't think it would make China look weak to say, all right, we'll buy some food. You give us a little bit of relief on Huawei and don't do the Christmas tariffs. If that happened, I think you see oil spike much higher, and as well as equities. Now on the flip note, we don't get that farming purchase. That's our best indicator that trouble is ahead. Also, another trade I'm looking at, have any of you guys traded the futures market?
Sure.
Okay, cool. Well, so yeah, so if we don't see that farming purchase happen in the near future, we'll be looking at a future contract on CNY, probably with expiration maybe around January. Because my expectation is we get this, more of this bullshit. Yeah, we're gonna buy farming goods, blah blah blah. Just kind of keep teasing us into October through their celebration, and then they don't do it. And sometime in October, Trump gets upset. So that's what I really think is most likely to happen, just based on what we've seen for the past 2 years. And so if that happens, I believe. So for every penny with the future contract, every penny this thing goes up, you can make a very large profit. Now, of course, on the opposite, if it goes lower, same thing can happen. But yeah, if we could get the CNY, I'm not sure why I took a picture of CNH, but the one you can trade at Interactive Brokers is CNY. If this goes up to somewhere like 7.3, 7.4, which I think it could by the year end, it was just at 7.2. The profits we can make in the futures market are huge. So yeah, it's a risky sort of trade, so we'll have to use a small position size. This would fit into our buy and hold portfolio, and I do want to show you guys how I've optimized that. Now again, I'm trying to make this so easy to follow that you don't have to bother with the spreadsheet. But I have slightly changed it. So instead of buying those puts on FXI, I like Yang, just to make your life easier. It's essentially them rolling over puts and futures anyways, so you don't have to do all the busy work. So we got Yang potentially coming up in October if we don't see that deal come to fruition. And unfortunately, the American stock market and Chinese stock market at this point, I believe, are very correlated. So we would also jump into SQQ and probably SDAO. So these are all inverse ETFs. Yang is for the Chinese large cap. Now, I don't think we're going to get the same potential profit shorting Yang or buying Yang that we would get from buying a futures contract on CNY. So they can pretty easily manipulate their value of their stock market. You know, they don't have any real accounting. It's such a crazy setup there in China. So trying to short their stock, it's already pretty low. So I think there's some profit to be made from that. But I think the real way to get a huge return if the trade war escalates will be through a futures contract on CNY, which is their offshore. And they're already clearly losing control over the conversion rate of their currency, which we can see here. Also, what's Trump's next move? More and more tariffs. What's their only way to defend themselves? It's really just to devalue their currency and to sell everything they have that's U.S. related. But they can only sell so much because they have to buy oil in dollar terms. And that's why we're such good buddies with Saudi Arabia, is because we give them military protection and they force the world to buy oil with dollars. So that's how we keep that control over the reserve currency. So this is a great trade. I think it's too early, and if we get that farming deal, you know, that trade would go potentially really the wrong direction for us. But yeah, so to summarize, TLT, you know, a few months ago, TLT was the easiest to predict. And now it's the opposite, because now we have the Fed manipulating the treasury market. And now it's somewhat obvious that stocks should rally because we're getting all the capital, all that speculation out of the bond markets. Central banks are loading up. And so this should be very bullish on our gold, on our equities, and trying to guess where they're going to peg the interest rates. You know, who knows? So we got to look at the Fed speech here, 20 minutes, to try to get some sort of idea of at least what their intentions are, and you know, what's the right rate that they're going to peg it at. So that's kind of what my outlook is right now. Oh, William's in. Tom. Not William. How's it going, Tom? See, I think you got your mic. Oh, there he is. How's it going? What about you, Jerry? What's going on in your portfolio? I know you've been skeptical of the stock market for quite some time. Oh, he's on the phone. No worries. All right, guys. Well, let's see. Tom, did you happen to see the piece on potentially doing a futures contract on CNY? And I think you got your mic muted. Oh, there he goes. Tom, you got your audio going? Oh, back to. All right, guys. Well, I'm gonna probably let you go a little early today, just because I want to be prepared for listening to old Powell. Definitely recommend you guys listen in on it if you want to be part of the finance gossip today. And we'll see what we get on that TLT tomorrow. Hopefully, get a little bit of a sell-off.
Hey, Jason, I got one administrative type of question real quick.
Sure.
I don't know if you guys can do this or not, or if it's possible, but on your live cast that you do Monday through Friday on YouTube, is there a way, because sometimes I'm running around, I'm not someplace I can tap into, but I have my phone with me. I could listen, and sometimes that's just enough. Do you have or is there a provision or something that they can provide, or that is possible, so that I can actually like call in with a phone number, a password or something, so I can at least hear?
Great question. Great question. This is actually going to be week 1 of our boot camp, as silly as it is. But no, let me answer your question right now. You don't need you don't have to buy the boot camp to get this problem solved.
Okay.
So
I know I still have to look at that info too.
you have your Apple phone on you?
I beg your pardon?
You have an Apple phone?
Yeah, I do. As a matter of fact, I'm looking to upgrade it. That's why I was curious.
In fact, I recommend all of you guys do that. Download the YouTube app. And then you're going to want to subscribe. So yeah, I'm in the same boat. I got a soccer kid, so we do 6 tournaments a year. We got 4 practices a week. It's absolutely ridiculous. I'm in the car way too much. And so a lot of the people I do like to listen to, they're flipping through a million charts, but at the end of the day, you can listen to what they have to say and understand the message.
Right.
And so if you download the YouTube app and search for Portfolio Builder, subscribe to the channel and click the bell. And every day we schedule that live stream, so that you'll not only see the live stream is scheduled at the top of your feed, every day it'll pop up, and then you can listen to it live, or you can listen to the recording right after. So the YouTube phone app will connect you live to our live stream daily.
Okay, well, I'm subscribed to it, but that would then pull data as well and see I don't have the unlimited data thing. It's a whole long thing because of my husband's phone too. So that would actually play the YouTube itself though, right? It's not going to go through phone system. That's through data, right?
If you're connected, if you're in your car, it's going to use your data plan. Yeah.
Right. Okay. All right. That's fine. Thanks.
But yeah, so let's see what all I'm subscribed to. So yeah, a lot of times less is more. So I've tried to be pretty picky about who I listen to. Well, let's look at the channels I'm subscribed to. Oh, I have to go to a different account. One sec. So here comes the escalation in the Middle East. That's what we're looking for with that oil play. At the same time that we have a bull market in stocks. But yeah, I do exactly the same. So now I'm not subscribed to all these. See, this thing hasn't updated. I'm subscribed to far less than this, but yeah, all the important stuff I follow each day pops up. And I've got my bears, I've got my bulls, I've got the Russian media, I've got the Chinese media, I got the doom and gloomers, that's pretty, CNBC, Fox Business. I listen to Peter Schiff. I like to listen to Forex Guy, not because I'm trying to trade Forex, but because those guys are super, super in tune with what the Federal Reserve, what the banks are doing. And so together I can listen to all this stuff. And what I like to do is I'll go to my channel. I wish I could pull up my visual on my phone, but I'll open the YouTube app a few times a day, click on the subscriptions. It's going to show me all the newest videos that have popped up. What's neat about this, instead of watching like CNBC Live or Bloomberg Live or anything like that, they cut out the best clips and filter it for you so you have less to view. And then there's a little dot button where I'll click the dots and hit save to watch later. So I can scroll through my feed and pick up all of the best stuff that's come out in the last few hours, put it on my watch list, and then I go to my library in the app and click on watch later and click on it, and it'll just start to play all of these different things I've signed up for. And then I'd also recommend getting a Bluetooth headset. That'll make your life a lot easier. And you can just fill yourself with educate. I can't get through all the videos I put on it each day. There's just no way. And so yeah, that's a great idea. Great question. And I'll get you guys a list of what I listen to on YouTube and Twitter so that you can, if you like, follow the same sources. Now on Twitter, if you're not if you're not careful, you're going to get way too many people to follow. I'm used to using these on my phone primarily, so I'm trying to figure out where we can see who I'm following. I'm only following like 4 people on Twitter. And maybe about 10 people on YouTube. Oh, well, thanks for the compliment, Oscar. Yeah, hopefully we get a little sell-off on that TLT here. But if not, I think we're break even up to like 50 cents higher than we are right now. And if we get below 30 cents, we'll get a little profit out of that one.
Hey, Jason, you talked about what you follow on Twitter and YouTube. Can you put that in the email and send it to us?
Yeah.
Thank you.
Oh, Richard just made it. Hey, Rich, how's it going?
Hey, Jason, how you doing? Yeah, I just got back and I just decided to log on and see how you guys are doing.
Nice, nice. Yeah, I was just telling Karen, she was asking, is there any way to get the live stream in her car from her phone? And I was highly recommending that everybody does download the YouTube phone app. And I'll send a little email out, probably maybe, we'll see how soon I can get together. But I'll tell you, here's what I follow on YouTube, and here's what I follow on Twitter, so you guys can get the same flow of information I'm using, because I know a lot of you really enjoy not just doing the trades, but following what's going on in the world. It's fun. But yeah, if you do download the YouTube app on your phone and then subscribe to our channel, it will automatically pop up every day. So you can either listen live from your phone, or you could watch the replay on the go. So that's always a nice, something nice to do, which I don't want to ruin my eyes. So I try to get as much content as I can, audio as possible versus reading. But
Boy, I agree with that.
yeah, I'm already got glasses and I'm only 34. So
A mere child.
Yeah. I was playing video games at too young of an age, I think. Computer games.
Wow. Get the blue blockers. You're on the computer too much.
Yeah, I got my son those blue blockers. He won't wear them though.
Well, tell him to do it because you know what? I got glaucoma now, and I just wonder if it's from years of sitting in front of a screen too much sometimes. So do it.
Oh man.
No excuse.
All right, guys. Well, I got to get ready for Pal's speech so I can try to digest it. What I was going to say, Richard, is that over the last few months, predicting the TLT was what I was really confident in, and felt like it was really pretty dead obvious. And now the tides have turned. Now we have the Fed manipulating the bond market with $150 billion purchases of treasuries in the last 48 hours. So now it's at the whims of where the hell are they going to pick their interest rate. But now it's pretty clear that all this money is going to flow into equities while we figure out if U.S.-China trade war is going to de-escalate. Now, it is important to know there's this thing called the quad witch. It's where a ton of different expirations hit at the same time. That's this Friday. And that can sometimes tie equities to a certain price because there's so much money on the line. So we may not get this big pop until next week, is what I'm thinking. So, but in case, we're positioned to do well if it happens today. So let's see, we're still sitting at 300. And yeah, 300 has just been this magnetic, sticky spot for the SPY. So
Yep.
I think once it does break out, that's when the fireworks are going to come out. So, oh, Rich, did you get to see our bonus trade?
No.
I might stay. From what I'm getting to see, you might be better off. Our current trade will perfectly profit from what we're expecting. I'll just throw it up real quick. Ernest is doing it. And then I got to let you guys go. This is not part of the advisory. It won't be in our track record. But a lot of times people are like, well, how would you make this a little more speculative? And here is the trade. So this one, you sell a put against Apple. And then we're going to take that credit and buy a bull call spread. And this one has potential for an 800% return with very little risk. The risk is that if the market does go lower, we'd end up owning 100 shares of Apple. So we'll cover this next week, see how it plays out. Ernest got it, so we'll have to get Ernest's profit next Thursday, okay?
Okay, thanks.
All right, guys. We'll see you next week. Also, if you want to join the webinar tomorrow, welcome to hop in there. It'll also be some of the people interested in joining the program, so it's totally optional. But would love to see you again tomorrow, and we'll go from there. All right, bye, guys. Until next time.
Thanks. Take care, guys.
Bye, guys. Goodbye.